In this hopefully short video, I'm going to take you through the 2019 club account question, just question 6. So it was a 100 mark question, Crestwood Golf Club. So you can see in all of these questions, you'll have some information at the start of the year, which is the first of the first, some assets and liabilities. Then during the year, you'll have things that are in the receipts and payments account. So anything that happened during the year for the club will always be in here. And then anything that's important at the end of the year, we've mentioned at the end of the question on the second page. So you can see we have 8 notes on that. And these questions are always the same. They start off with showing the club's accumulated fund, which is what I'm going to take you through in this video. So most of the information is going to come from the top of the question, first of the first, because that's the date we're given to do the accumulated fund for. And you can see here we have clubhouse and course, bar stock, equipment at cost, investment interest due, bar debtors, life membership, bar creditors, wages due, labour reserve fund, and subs received in advance or subs prepaid. So all of those have to go in, and I've put them in here on the assets or liabilities side, depending on which one they fall on. There are a few others that will come up in the receipts or payment side of the account, or at the end of the year, which we'll talk through now in a few minutes. Okay, so starting off first with clubhouse and equipment, the two fixed assets. It does mention that all fixed assets have 2 years accumulate depreciation on the first of the first. So the figure we're given here is not the net book value, it's the cost value, and we need to do depreciation on both of those. So for the clubhouse, we have cost, which is 550,000, and it's 2 years depreciation at a rate of 2%, which says here in note number 7. So to figure out, we have 550,000 multiplied by 2%, or 0.02, multiplied by 2, and that's 22,000. So we need to do the cost, 550,000, minus 22. That gives you 528,000 for the net book value. Equipment, it says here that equipment is 20% of cost per annum, and the cost is 26. So the depreciation, 26,000 multiplied by 0.2 multiplied by 2 years, 10,400. And then again, for that, we have 26,000 minus the depreciation of 10,400 gives you 15,600 for the net book value. Okay, bar stock, again, this one's a lot easier. It's just given to you in the question. You can take it as it is, 5,800. Investment interest due, 400. Again, you can take that as it is. Debtors, no change there, it's 480. Now, they are the only ones mentioned in the top of the question at the start of the year. So looking at investments, if we have investment interest due, then we must have an existing investment from last year. So you have to look at the beginning, the end of the year, and also during the year for this question. So to figure out the value of investments, what do we know? Well, we know on the first of the first, there was 400 due. Okay, so that's 400. Then during the year, we received 2,800. Okay, now you just have to look at the end of the year. So at the end of the year was any mention of investments. You can see here, note number 3, investment interest due is 300. So 31st, the 12th due was 300. So you add what's for this year and minus anything that's from last year. So if you think first of the first due, it's due from last year, so you're going to take that away. And the amount received during the year is obviously for this year. The amount at the end of the year was also due. So if it was due at the end of the year, it's for this year. So we're going to have the 300 plus the 2,800 minus the 400. 2,700, and it says we receive 4%, so that represents 4% of the investment. Okay, so to figure out what 100% equals to, we get 2,700 divided by 4 multiplied by 100. That gives you 67,500. The last asset, is levy due. So you're going to find that at the end of the year, and there's always going to be a mention of levy. Look for anything that mentions 2017 in the notes, and you'll see here in note number 4, levy for 2017, €50 due from each member. So that's 50 multiplied by 20. And that'll give you 1,000. Okay, I'm just going to move these figures over 1. Okay, there's nothing else that jumps out. Okay, one thing to be careful of, it doesn't come up that often, is this transfer from building society, okay, of 10,000. If we transferred it from the building society, it must mean we had a building society account at the start of the year to transfer it into, because it doesn't say anywhere else that we put money into a building society account. So I'm going to have to add an extra line here for building society of 10,000. Okay, and we'll adjust this line here to account for that. So now we add in the 10,000, and that gives us total assets of 628,780. Okay, so be careful with that one. It doesn't come up that often, but if it is there and there's no other mention of building society, then we must have had that account from last year, because it didn't just come out of nowhere, that money, that transfer. Okay, now with your liabilities, again, a lot of these can just come straight from the notes up the top at the start of the year. So we have life membership of 45,000. Bar creditors are 750. Wages due 1640. Again, all of these can just go in as they are. Levy reserve fund 30,000. Okay, so that's money we received from members, but we need to spend it on improving the club in whatever reason it was that we gave to them. Subs received in advance or subs prepaid 1,900. Now we finish this, we need to look during the year. Okay, so the first one that jumps out there is balance first to the first. That's your bank balance, 7,300. It's on the right hand side or the credit side, so it's a liability. It's money owed. If it's at the start of the year and it's on the right hand side, it's a liability. Okay, at the end of the year, this one here means it's an asset. So the loan interest. Now, if you look here, it says we have a bank loan and 18 months interest at 3% per annum on the 31st of May. 20,900. So I'm going to put down as much information as we have there. Okay. So first thing we have is 20,900. Okay, is 18 months plus 3% per annum. Now, if it's 3% per annum, that means it's 3% for 12 months. And we had the loan for 18 months. So what interest rate is that? To figure it out, you might be able to do it in your head, but if not, 3 divided by 12 to figure out what 1 month is. And then you multiply it by the amount of months we had the loan for, 18. That gives you 4.5. So that's 4.5%. Now we split the loan between the interest amount and the capital amount. So 20,900 is loan plus interest. So what is just the loan amount? That total there, 20,900, is 104.5%. So to figure out what the loan capital amount is, you get 20,900 divided by 104.5 and then multiplied by 100%. That gives you 20,000. Okay, now we need to figure out the interest amount. So the interest was for 18 months. We repaid the loan to 31st of May 2018. So that means 5 months are for this year. So that wasn't owed to the bank at the start of the year. If 5 months are for this year, the remainder, which is 13 months, must be from previous. Okay, so the interest amount is 900. So we get 900 divided by the full amount, or the full months, which is 18, and then multiply by 13, because that's the amount of months that we owed at the start of the year. That gives you 650. Okay, so again, if you add up all of these, just add them up and then see, make sure it looks okay, that you haven't forgotten a figure or anything like that. So 20,000 all the way up to 45,000. That gives you 107,240. Okay, now your accumulated fund is assets minus liabilities. So total assets minus total liabilities equals 521,540. So that's your accumulated fund on the 1st of the 1st, 2018. And if you have a look at the end of the question here, it says accumulated fund 1st of 1st, 2018 is worth 30 marks. So that's 30% of the question done. In the next video, I'll go through the income and expenditure account for the year.